Okay, let's unpack this. The market here in 2025, it's been quite a ride already, hasn't it?
Oh, definitely. We've seen our share of volatility, some of that tied to things like, tariff actions.
Right. But amidst all that choppiness, there's been this, well, surprising resilience, I guess.
Exactly. We're seeing the S&P 500 and the Nasdaq actually managing to stay slightly positive year to date, kind of clawing back from those earlier dips.
And what's really driving a lot of that rebound, as this source material we're looking at highlights, is pretty undeniably the technology sector.
Yeah, tech has been a powerful engine there, no doubt.
Absolutely. And it's not just about, like, bouncing back. The massive conversation right now is this pivot to artificial intelligence.
AI, yeah. The sheer scale of the opportunity is, well, it's staggering. The source we're exploring today points to AI potentially contributing up to $15.7 trillion annually.
Trillion with a T.
Yep, $15.7 trillion to the global economy by 2030. That figure alone really tells you the potential impact we're talking about.
It certainly puts the scale into perspective.
Yeah.
But the source is also very clear on the challenge this presents for investors, right?
Mm-hmm. Because while the AI wave is huge, picking the specific companies, the actual winners in this race, that's been incredibly difficult, uneven so far.
And if you're someone starting out, maybe with limited capital, say just $500, trying to decide which single stock or even a couple of stocks to bet on, that feels incredibly risky.
It really does, and that's the core problem this deep dive is going to tackle, drawing directly from the insights in these sources.
So how can someone with that $500 potentially get exposure to this tech growth and specifically the AI opportunity, but in a more diversified way?
And why does this source specifically present the Vanguard Information Technology ETF, or VGT, as potentially a compelling solution?
Okay, let's dig into that. What does the source material tell us about VGT?
Well, the source immediately homes in on diversification. That's presented as a primary benefit. It explains that VGT is designed to track an index, the MSCI U.S. Investable Market Information Technology 2550 Index.
Okay, an index fund. So the power of that index, according to the source, is that it's not just concentrated in a few massive companies.
Exactly. That's the key point. We're talking about over 300 different technology companies within that single index.
Wow, over 300.
Yeah. And this breadth is crucial because, as the source implies, disruption can come from anywhere, right? Small companies, big companies.
So you're getting exposure to the established leaders, the giants, but also potentially mid-cap, smaller-cap tech firms that could be innovating rapidly.
Precisely. So instead of agonizing over whether it's, David or Goliath who's going to come out on top in some specific tech battle,
you're essentially placing a bet on the entire playing field, or at least a very large chunk of it.
That's the idea presented. Now, the fund is market cap weighted. So the largest companies, they naturally hold the biggest percentage of the fund's assets. You'll definitely have significant exposure to the giants.
Okay, that makes sense.
But you also have that broad base, companies building everything from software to hardware, semiconductors, you name it. And the source points out that because of this wide net, while VGT isn't marketed specifically as an AI fund,
it kind of captures them anyway.
Exactly. You do automatically get exposure to leading companies heavily involved in AI.
So we're talking about names the source specifically highlights as AI heavy hitters being part of this broader tech basket.
Yes, the source actually calls out companies like Nvidia, Microsoft, and Palantir Technologies as examples. Examples of the kind of AI-focused companies you'd find significant exposure to within VGT's diverse holdings.
Okay, so the diversification makes a lot of sense for spreading risk, especially in a really fast-moving area like AI tech. But does the source give any context on whether this broad approach has actually performed well over time?
Yeah, good question. And the source is very clear. Past performance is never a guarantee of future results. That's, essential context for any investment discussion.
Always the disclaimer, right?
Always. However, it absolutely presents what looks like a compelling case for VGT's track record.
And that history goes back a ways.
It does, yeah. The fund was established back in 2004. And when the source compares its performance to the broader S&P 500 index, well, the difference is quite striking.
How striking are we talking?
Okay, so over the past decade, looking at total return with dividends reinvested, the source states VGT returned a remarkable 543%.
543%?
Wow.
Okay, compared to
the S&P 500's 245% over the same period.
Wow. Okay, that's more than double the return over 10 years. That certainly underscores the tech sector's historical tendency to outperform the wider market. The source notes, that's a factor here.
Definitely. And you can see how the performance of certain individual tech giants within the fund, like the source mentions, Nvidia's reported 690% gain over the past 3 years, how that can really contribute significantly to VGT's overall numbers because they're such large holdings due to the market cap weighting.
Right. Those big winners pull the average up substantially.
Exactly. And looking ahead, the source emphasizes that AI is still in its relatively early stages. Remember that potential to reach trillions in value. This suggests that many companies already within VGT's portfolio could have significant growth potential still ahead of them.
Okay. Growth potential, broad exposure. Sounds great, but investing always comes with costs, doesn't it? What does the source say about that? Especially relevant for someone starting with, say, that $500 amount.
Right. And this is another key benefit the source really highlights for VGT. It talks about expense ratios, those annual fees funds charge as a percentage of your investment.
Okay.
The average for indexed ETFs, the source notes, is around 0.41%.
Which is, reasonable enough, I suppose. But Vanguard has this reputation for keeping costs low.
Precisely. And VGT is presented as a prime example of that. It has an exceptionally low expense ratio, just 0.09%.
0.09%. Wow.
Yeah.
So if we translate that for you, the listener,
Yeah.
that's just $9 a year for every $10,000 you might have invested. That's incredibly efficient cost-wise.
It really is. Now, let's address that specific $500 investment amount you mentioned right at the start.
Right, because the share price.
Exactly. The source notes that as of June 13th, one single share of VGT was priced around $625.
Okay, so right there, $500 wouldn't even buy a single share. For someone with limited capital, that looks like a pretty significant barrier.
And this is where the source makes a really critical point, that share price doesn't have to be a barrier anymore for investors with limited capital.
How so?
The source highlights the increasing availability of fractional shares through many brokerage platforms these days.
Ah, yes. Fractional shares. So you don't have to buy a whole share, you can just buy a piece of one.
Exactly right. You can take your $500 and invest the full amount buying, 500 divided by 625, so about 0.8 of a VGT share.
And you still get the same benefits.
You get the same proportional exposure to all those 300 plus companies, and you benefit from the same low expense ratio, just on that smaller scale. It completely removes the share price as a roadblock for getting started.
That truly is a game changer for accessibility, isn't it? Especially for smaller investors looking at funds that might have higher per share prices. So, okay, drawing from everything we've covered from the source material, the context of tech resilience, the massive AI opportunity, the difficulty of picking individual winners.
And then VGT's broad diversification across the tech sector, including those key AI players.
Right, plus its historical outperformance compared to the S&P 500. It's very, very low cost, and now this accessibility even with just $500 through fractional shares.
Given all that, the source describes VGT as, and this is a direct quote, a no-brainer buy for many investors looking for tech exposure.
No-brainer buy. That phrase from the source really encapsulates its view, doesn't it? A straightforward, accessible way to potentially participate in the tech sector's growth.
Seems to be the argument presented, yes.
So we've unpacked the source's view on the market landscape, the huge potential of AI, the challenges of individual stock picking, and why VGT is presented as this diversified, low-cost solution, accessible even with limited funds.
Pretty much covered the key points from the material there.
Which leaves us with a final thought for you, this listener, to consider. Building on what the source material talks about, this rapid pace of technological change, AI being in its early stages, given how quickly innovation happens, and the source emphasizes VGT is broadly diversified across the entire tech sector, not just AI, how might that structure potentially position an investor, not just for the AI wave we're currently in, but maybe for the next significant technological breakthrough, whatever that might turn out to be?
Something to think about. Where does the next big thing come from within tech? And does being broadly invested help capture it?
Exactly. Something to mull over.